Hey everyone, and welcome back to another episode of Data Driven Value, where we show you the tools and teach you the skills to help you take your financial freedom into your own hands. So, following up on yesterday's video, we're going to look at the markets again, kind of very chart based today. There was some news, we'll cover that, and then we'll cover a bunch of different stocks, miners, crypto, that kind of thing, but kind of try to get a good sense of where the market might go in the near term. So, obviously, we did see a little bit of relief in terms of tensions surrounding the tariffs and the potential trade war. We see that the US has backed off for now for the next 30 days in regards to Mexico and Canadian tariffs. In return for the Canadian government, they're investing $1.3 billion into border security. And then the Mexican government was sending 10,000 troops to the border there on their side as well to kind of combat that illegal migration as well as drug trafficking. So we'll see what happens going forward. Obviously, it's just been postponed for 30 days. And I think that's essentially going to be what Trump is doing with most countries is he's just trying to get his way. So he's going to threaten them with tariffs, and then as soon as they kind of concede to his wishes there, then he's just going to kind of postpone it, do it on a per month basis is kind of what I'm anticipating. So in a month, I'm sure he'll reassess. He might actually increase his demands as time goes on. So that's kind of the thing that we need to be a little weary about is if we're conceding this early on, Trump realizes. So a lot of people are saying, oh, well, Trump's rolling over and he's conceding, but at the same time, essentially us as the Canadian government and the Mexican government is also conceding a little bit. So we'll see kind of going forward if these negotiations continue to actually be productive or if it ends up just kind of being a bit of a pissing match between governments in the future. We'll see in a month kind of what Trump is saying in regards to the tariffs, and we'll also see if he does actually implement tariffs on the European Union there. So we'll just jump into the charts, though. That's enough kind of the politics for now. We all recognize the risk. We know it's there. That being said, there is opportunities out there, so we're going to go try and find them. So flipping over to the charts here, we're looking at the SPY, so our major stock market indice. Obviously, green for the day here, so up 0.6%, kind of recovering some of the loss from the prior day there. Obviously, yeah, market's kind of reacting positively to that de-escalation of the tariffs. So we will see hopefully some follow through there. And otherwise, watch for the price action up here. We'll get into that in a moment here, but we're going to take a look at our momentum indicators on the high time frame. So I'm looking at the weekly chart here, try to get a sense of what we might be looking at kind of in the coming months, maybe the next year in terms of potential price action or entries that we might be looking for. So obviously, we've got a bunch of different indicators here, so I'm just going to go through them one by one and kind of explain what they do and how to kind of gauge them. So here, this is the ultimate RSI tool. This is from Lux Algo, so it's just a little bit more detailed than a traditional RSI tool. It kind of encompasses more moving averages as well, so I just find it does a little bit better job of kind of gauging the near-term volatility or trends in the RSI here. So obviously, you see it here kind of curling over, putting in all these lower highs, and it looks like we're heading towards what could be a bearish cross. So when you see this orange line cross below this line here, that's a bearish cross, and that signals we're due for some consolidation or for some downward price action, just to come back, at least test lower support, and then see what happens from there. We also see this is the MACD, so the moving average convergence divergence. Big long name. Another important momentum indicator, really helps gauge if the market's in an oversold or overbought nature. So if something's overbought, it means the prices run up really high, and essentially you've just run out of buyers, and then the sellers are starting to take profits. So when you see it up here kind of in this overbought nature, it's sometimes a good signal that a local top might be in, and you might look for a strategic way to kind of take profits as these levels start to hit. That being said, these indicators are lagging, so they do lag the price action a little bit. They're based on kind of the moving averages surrounding the price action. And so, yeah, we kind of do see that they lag a little bit. They're never going to perfectly call the top or bottom, but I've kind of showed you that we don't need to time top or bottom perfectly. We just want to position ourselves at the start of a good uptrend, and then we want to get out of positions before we go into a sustained downtrend. And we can really capitalize on these moves and these trends and kind of compound gains like pretty well. So obviously the MACD here had that bearish cross that I talk about here. So in the MACD, orange over top of the blue, bearish cross, you see a red histogram. It just shows that there has been some selling here. It's not crazy. So you see here, The bigger the histogram, the larger the selling is going on in that area. And then moving down here, this is my whale money buy indicator, or my big money buy indicator. So essentially, this flashes gold when you see large money or smart money really making meaningful buys here. So we haven't seen it flash since 2022, actually since July 2022. And that was actually the lows here when we tagged this trend line. I'll show you that in a minute. But obviously, we see here we went into overbought territory on this indicator, and yeah, we're due for a little bit more. Maybe we got to come back and kind of retest these lower levels. I would like to kind of see those whales or those big money buys kind of start to show up here, but over and around here. Moving down, this is our stochastic RSI. So it's basically a combination of the RSI and the stochastic oscillator. You can kind of learn more all about the definitions and kind of the technicals behind these indicators. That being said, if you just learn kind of how to read them, so that's what I'm showing you. In terms of RSI, basically you're looking for under 30 RSI is going to be kind of that more oversold, undervalued territory. And anything above 70, 80 is going to be more in that overbought, kind of overheated territory. So we see here, obviously, it's hard to see actually. I'll pull this up so you can get a better idea. I will change those colors for you in the future to make it a little more visible. But you can see this blue line, that was that bullish cross right here. We got up, it's starting to curl back over, so it looks like we could be heading for a bearish cross on the stochastic RSI. Stochastic RSI is a really good gauge for short-term momentum. So I like to look at a traditional RSI or like the Lux Algo Ultimate RSI up here to kind of gauge longer term trends. And then the stochastic RSI, you can see there's a lot more noise. It really just gauges kind of the shorter term swings in price action. So you can see obviously kind of there's all these little ups and downs all throughout this price action. Again, I'll get into it in a minute. But you can see it kind of coincides with the swings in the stochastic RSI. So again, stochastic RSI is going to be your best friend for the short-term moves in terms of RSI tools, and then something like a traditional RSI or the Lux Algo RSI. There's also another cool indicator. It's an RSI divergence tool, so it plots the RSI as well as automatically shows you where there are bearish and bullish divergences. So another useful tool you can use in TradingView here. We'll take a look at the chart in specific here. So obviously, we're looking at this trend line that we've kind of been riding up. So we got in through here, we tagged it here, almost kind of came close to it here, tagged it here as support. So what we do see here, what I kind of want to show you, essentially, I'm looking at a similar move back here. So you see in November, essentially, we came up, we broke out here, we put in this first high right there, and then we put in this slightly higher high right here. But then you watch as we break down from this price action. So you can see as soon as we kind of broke that price structure, so we had our uptrend here, we were maintaining those higher lows and higher highs. And then you see here, that's that lower low. So that's where we risked our price action, our uptrend. And then you see that lower high right there, and then that lower low. So right at that point, this was now switched from a confirmed uptrend to a confirmed potential downtrend. It is only 3 data points, so it's kind of the minimum we require, but this should have told you essentially that this trend is really at risk, and based on the current price action, it's likely to just continue to go down. So we did see, obviously, it bounced here, got a little relief, but ultimately just bleeding back to the lows, to this trend line, and that ultimately was it's about a 10% move, I believe, from the peak down to that trend. Oh no, that was a 25. Sorry, I'm looking at the wrong one here. Yeah, that was a 25-30% correction. That was the initial recession scare right through here. So we saw the yield curve inverted here, and basically everyone kind of freaked out, and just everything sold off. I don't know if it was related around the inversion of the yield curve, but certainly that was kind of a big narrative as price was dropping here. Basically, everyone thinking that the inversion of the yield curve was actually what signaled recession, when historically speaking, it's actually the uninversion of the yield curve that signals recession. And as we've touched in prior videos, we are at the point in the uninversion of the yield curve where recessions typically materialize in terms of an average time span after that uninversion. So yeah, if you haven't seen that, definitely go check out some of my other recent videos, kind of, because there is that potential. Obviously, there was kind of a really big risk with those tariffs and trade wars. that it was going to push us into that recessionary territory. That being said, some of that pressure has been relieved for now. We'll see what happens in the future, but again, that's something that I'm aware of. And if we do see that larger correction, again, recessionary type correction is going to be 20 to 30%. Otherwise, even just a normal correction back to this trend line here from the high, that's still a 13% correction and worth buying in my opinion. I'll be a buyer down here. You do have some confluence of this support through here, and then we've got support all through these prior highs back to here. So we'll be watching kind of the S&P, maybe looking for a position, under 540, somewhere around this trend line if we do get it. But yeah, what I wanted to really show you is kind of that similar price action here. So we broke out, we put in our high, we broke out again, put in that slightly higher high, and then ultimately broke down. If we were to see something like that play out again, it would look something like this. So watch for price action to break this low right here, and then watch how it retests. On that retest, that's where we're going to really be looking at our momentum indicators to tell us if that move is sustainable or if it's likely to sell off or reject into resistance. So if we come down here, we break down, we get a little bit of relief, and then we go back up into resistance, and all the momentum indicators look overbought or overheated, my kind of sense is that we're going to reject from resistance a little bit below these highs and then risk that trend change. So that's what I talk about when I talk about confirmation. It's waiting for the actual confirmation of trend before we really start taking positions, because we do start to see kind of some risks arise in either the momentum indicators or the price action itself. So right now, what we're looking at is we did break that high, so at least we broke this, managed to take that out. We lost that low here, so yeah, again, just watching this, and then the two ways we're going to play it, either we're going to get a breakout and back test of the prior highs. So if we get something like this, all bets are, we get something like this, and then we come back here, and then our momentum indicators, again, you want your momentum indicators to support your thesis. So if we break out and come back, you want those momentum indicators to really be able to support that move across multiple time frames. So in that case, we're going to be looking more at our 4-hour, our 12-hour, and maybe our daily time frames a little bit lower. Obviously, though, right where we are right now, it's right in between resistance and support. So we're in no man's land, not really tradable in my opinion. I mean, you can dollar cost average into the S&P, that's up to you. But if you're looking in terms of trading opportunities, we're not sitting in anywhere very opportunistic in terms of the S&P. Obviously, again, this is going to be the move we want to see for a bullish price potential in the future. And then if we see something like this, watch for that rejection there, and then maybe we get our first entry back at this trend line. That being said, I will also pull the Fibonacci level just to show you confluence here. You can kind of see, so right in that 618, 786 golden zone, upsloping trend line, horizontal support. That's going to be a lot of good heavy support there for the S&P. And as long as we aren't going into a recession, I think that would be a really good buying opportunity. Again, that's about a 15% drop from the high. That's not really my base case. I've also talked about maybe buying into that 10% drop if we see it. So yeah, I want to see maybe 10% plus drop in the S&P from these highs, and then I'm going to start layering in and maybe accumulating a bit more of a position. Other than that, you can take some swing positions, but like I said, this is kind of no man's land. So you're taking on more risk by buying anywhere in here because we don't have confirmation of the trend yet. So we'll flip over to a few of our other macro indices here. So looking at the DXY or the dollar, yeah, we talked about this. So we said we come up here. We want that lower macro high. So like obviously this is lower than this high over here. But again, we did see that we broke out, and this is a technical uptrend for now, as long as these lows hold. So yeah, the dollar's still showing a lot of strength. Yeah, we want to see it break down below this support ultimately and bleed lower again for our risk assets. So either something like this where we come back up, maybe back test, and then we come down to these lower levels, test these lows of the dollar. Looking at something like that. Otherwise, obviously, not going to be ideal for our risk assets, but if we see the dollar break out, take out these highs, then my next bet is we come into resistance up here and look for that lower macro high in terms of the dollar. If we take a look at our momentum indicators, though, we do see, again, pretty oversold here. So looking bearish, I think, yeah, just based on those indicators, we'll take a look. Actually, let's look at the one-day indicators as well. Yeah, so kind of interesting. It is in more oversold on the 1 day, but more overbought on the weekly. So maybe we do, like I said, we see a little bit more of a push up in the near term, but I'm not convinced that we take out these highs. So watch these highs right through here, a lot of resistance, and yeah, we just want to reject below this and break down for that kind of for the ability for our risk on assets to really do well. Flipping over to the US 10-year. So again, just holding support, still holding this well. We'll see kind of what happens, what goes from there. The NASDAQ up 1%. We won't get too far into some of these other indices. iShare Russell 2000. So kind of green across the board. TLT down a little bit, obviously, because the risk on assets are doing well. So TLT, again, we're fine in this position, just holding it. Yeah, if it comes below these lows, then I will cut that trade personally. Um, but that's kind of just me going forward. So also taking a look at Bitcoin here. Obviously, we do see, so again, we're kind of bounced from this Fibonacci support as well as this 92,000 support down here. And then we've got our resistance up here. So, sorry about that. Yeah, got our resistance up here. And then now we're just looking at the low time frame. So let's take a look at the 4 hour, see if we can get an idea of what's going on. All right, guys, so you know what this looks like. This is right now a technical downtrend, obviously. So lower low, lower high, lower low, lower high. Here we do have the chance to actually reverse it. So I'm going to take a look at those momentum indicators here, see what we're looking at. RSI quite oversold, but that being said, it looks like it's coming towards that bearish cross. MACD overbought, curling back over, not ideal. Looking at our whale buy indicator, we don't see any whales stepping in right now as of yet at these levels. And our DMI, so this is directional movement index, also bearish setup. Yeah, looking bearish on the 4 hour, looking bearish, looking a little bullish on the 12 hour, but again, the 4 hour is going to be the immediate kind of move there. So what I would anticipate kind of we see, again, we're just going to come back down. Maybe we retest the 618 and try to hold it as support and then reverse our price structure from there. So just watch that. 618 might be a little swing entry for Bitcoin here, kind of below 97, closer to 96.5. Or maybe we come back down to the 786 here, 93.3, put in that higher low, and then we can kind of. So this is a bit of a range too. Like if you look at this, it's not the worst idea to take a position down here at the range low and then take profits at the range high. Obviously, that's kind of what I did in the last rally. And, it's a good way to trade a range-bound market. It's also what we saw kind of back over here. So essentially, you did see if you were trading, even just trading the middle of the range, like if you were to buy down here and sell up here, that's a 22% move, and you would have been able to do that 1, 2, 3 times. So a lot of opportunities there. You could have done it more if you're like actually following this very closely and kind of scalping it. That being said, obviously, we don't have the crystal ball, so but yeah, you can see the opportunities to kind of scalp a bit of a range here. So that's kind of what I do in these situations is I'm not really looking at buying or accumulating large amounts of Bitcoin kind of right now. I do a lot of my buying when prices are cheap or after large retracements. So that's why I've got these areas marked down here. Definitely if we go to 92,000 again, I think it's worth getting some Bitcoin. But then I do have these alternate areas marked. They're high time frame Fibonacci levels as well as horizontal support. So do recognize there is the risk for us to come back to these levels. It's not uncommon to see Bitcoin drop 40 to 50% in the middle of a bull market. It's happened in the last prior cycles. So don't be surprised if it happens again. That's going to be your best buying opportunity at this point in the market cycle if we see something like that. So if we see even a 30% drop, so let's say 30% brings us back to this Fibonacci golden zone, great buying opportunity. 35% is going to bring us back down to these prior highs. A 50% drop is going to bring us down to this zone here, this lower support zone. And it's gonna wreck a lot of people if we do experience this drop. This is kind of that black swan drop that I have a major cash position for. So if we do see kind of something trigger some major fear in the markets, then we might see that flush out down to these levels. That being said, there's so much support up through here that I do think it's not my base case, but again, you have to be ready for multiple scenarios in this market. I'll kind of show you in the prior market cycle as well what I'm talking about there. And you see here, So we had our massive run up here into January. We had a sharp correction in January, so pretty interesting. We're actually correcting in January, February right now. So similar timing there, and then it got another push up, and you see we did have another correction through February, but again, just able to kind of keep grinding up to those highs. But you see here, once it did top and we switched our trend structure, we came back to that 618 level here, which again offered great support and was able to bounce from there and continue to the next highs. So if we're looking at similar price action from the current rally here, basically we would be looking at pulling our Fibonacci golden zone, our Fibonacci tool from this low here all the way to this high up there. And you can see this horizontal support right through this Fibonacci golden zone. So you can see if we did ever come back to here this cycle, assuming that we're not going to go into a depression or the recession, we might be in a recession, but still can offer very good long-term buying opportunities for Bitcoin. So watching these zones here, and then if we do get the opportunity back here, you definitely want to be trying to get as much as you can, in my opinion. So that being said, we'll just move on here. We'll take a look at gold. Gold's, again, we've talked about it. It's doing amazingly, pretty much. It just keeps going up. Obviously, risk-off assets are doing quite well, but risk-on assets getting a little bit of relief today as well. So taking a look at the daily chart here, gold's looking very overbought, kind of a little overheated. We haven't seen the major buyers stepping in on our big money buy indicator, and all our RSI and MACD are overheated. We see the DMI kind of here coming back towards that ADX line here, so we don't want to see that cross below. We're still fine as long as the blue DMI plus line is above the orange line here. But if we see this red line cross above the blue, that signals that we're losing a bit of momentum. And then we might start to see this orange line and this blue line start to kind of converge together. And if they cross, that's a bearish cross and signals a potential downtrend. But we'll just watch that as we're following it, kind of thing. We'll flip over to the short time frame again. Look at this beautiful uptrend, guys. So this is exactly what I'm telling you. If we can position ourselves in these trends, we can really capture a lot of this move. So you can see here, basically we came in, we put in that low, we put in a higher low, a higher high, a higher low. So that's 3 data points, confirms that we have the potential to keep that trend. So we would enter right here. We put our stop loss below these lows, protecting the structure of the market. And then you can see from that point, we essentially moved up 9% on gold. So it's a pretty big move for gold. Obviously, if you're coming from Bitcoin and crypto, it's not a very big move, but gold is a safe haven asset. It's not very volatile. So yeah, a 9-10% move in gold is actually a really good move. And it's just that amazing breakout, backtest of support, and continued uptrend price structure, not showing any signs of slowing down in terms of price action. Our momentum indicators are showing as a little overheated, but again, we're just showing beautiful price action and an obvious uptrend and not really worried about it yet, but we will keep following that. We'll flip over to some stocks. I want to cover a couple ones today. So the big one is going to be Palantir here, smashing their earnings. I think they beat it by about 24-25% in terms of EPS, and then they beat their earnings by about 7%. So you see here, huge day, up 25%, massive gap up here. I did mark some levels of support that we might be interested in a swing position in Palantir if it comes back there. But we're going to take a look at our momentum indicators, obviously. Very oversold across all of them. We saw a lot of buyers come in here. So obviously somebody knew earnings was going to be good, and they stepped in and bought a lot here and pumped it. Obviously a great trade for them. Buying kind of into earnings can be a really volatile trade, so I don't always recommend it. I do it sometimes. That being said, every case is kind of different. You really need to understand the volatility around earnings. If you see something kind of dumping into earnings and you expect the earnings to actually be good, that can be a good buying opportunity. And kind of alternatively, if you see something pump into earnings and you kind of think their earnings aren't going to be great, then it kind of gives you the opportunity to short that stock. Generally, the market will price in a lot of the earnings, and unless there's a massive beat, so like in Palantir's case, I don't think a lot of people were expecting such a large beat there. So really popping up, massive move here. One thing I do want to show you, though, I'm kind of looking at the prior market cycle here. If we go back in time, I'll flip to the day or the weekly chart to get a better idea here. Spread this out. So you see here, just get rid of some drawings. All right, so yeah, you see here, basically last cycle we had this big run up. We went into this sideways consolidation, bull flag consolidation. We had a huge breakout up here, and then look what happened after. We put in that lower high, and then we came back. We retested support or prior support, now resistance. We got rejected, and that's where kind of the whole market structure changed. You saw right here, we tried to kind of reverse that price action. So we were getting those higher highs, higher lows, but we lost it right here and then ultimately bled all the way down here. So that's just something I'm watching right now. The timing and the price action look quite similar. So we obviously see here running up. So we have here this massive run up to the first high right around November, December. So that was kind of November. See, look at the timing. It kind of lines up too. We did sell off a little bit into this sideways consolidation, and then we had this huge move popping out, similar to what I see over here. So yeah, this huge move out of this, and then yeah, now we just have to wait and see what happens next. So obviously, on this move, it ultimately sold off, came back down, and broke down below there. So if we saw something similar, it might come back down and break below these levels, and we might be even testing some of these lower support levels. Again, it's not my base case. That's just kind of, you have to consider these because the technicals basically say they are possible outcomes, and we can't predict kind of any actual market uncertainty or again black swan events. We can't predict them. So I just have these in the back of my mind, and if price comes down there, it's going to be a good buying opportunity. In terms of right now, I would not be buying into this chart. That's just crazy. It can keep running up. I'm no genie. I can't tell you what's going to happen in the future, but I'm telling you from all the other charts I've looked at that look like this, people telling you that it's just going to keep going up and to buy up here, keep going, buy up here. That's not the right call. Generally, you might get a little bit of gains on the top, but in the long run, you're going to buy a lot of resistance. You're going to buy falling knives. You're going to buy tops if you're buying into charts like this. That's why we just pull our technical levels and we wait for it to come back to support, and that's our entry there. So I'll flip over to MicroStrategy because that's one I just want to show you kind of what, people were telling me to buy it at 500, 550. So again, this was MicroStrategy here, and I actually have a position now, but essentially we had this massive run up from $100 all the way up to $550, so 5.5x in the span of about 2 months. And everybody was saying MicroStrategy is going to $1,000 up here, so they're telling everybody and their mom to buy up here. And look what happened. Just that normal Fibonacci golden zone retracement that I always talk about. That's why I'm patient. That's why I don't buy up here. That's why I don't chase these charts. If it keeps going and I don't get a position, again, I'm okay with that. There's going to be more opportunities and we're going to be able to take advantage of those. But if we buy up here and then we ride this all the way down, we're putting ourselves at a massive disadvantage going forward. So again, just practice that discipline, manage your emotions, don't buy resistance, wait patiently, and execute your plan when it comes to the levels that you've previously marked. We'll flip back over to the stocks again. Just look at a few other ones here. See, obviously, gold miners doing well here, obviously, with gold. Yeah, broke out of this little downtrend as well here. But again, I think we probably see a higher low before we're able to reverse the structure on the gold miners. Again, just because gold's doing well doesn't mean that miners are going to do well, especially if we go into a time of economic stress or hardship. It's going to be hard for every company, essentially. So just keep an eye on that. Flipping over to Tesla again, just sitting above these levels, so not quite at any level of interest. We talked about NVIDIA yesterday, so it kind of came down to our 786. We talked about that being pretty good value, for people who didn't have a position in NVIDIA. So we do see a little bit of relief there. If we flip over to our low time frame, a couple 4-hour green candles here, and we're looking pretty good. We see obviously here the DMI heading to cross that 80x line, but we want to see it kind of break out above this orange DMI minus line here. We see the RSI with a bit of a bullish cross. No big buys stepping in here, but that's okay. We are oversold on the indicators here. So I do think NVIDIA could probably get a little push up. We probably looking at, at least coming back up, testing this resistance rate in here. Hopefully we can take out this high. That being said, if we can't, let's just hope that we come back and print that higher low somewhere over here. Moving on, let's take a look at Amazon here. So yeah, again, beautiful price action. Look at this. We look at these downtrend, breakout, back test, and we're off and running. So that's like really pay attention to this price action. You'll see it lots. And again, it's just breaking out beyond its highs here. So Amazon doing really well, not slowing down. I'll flip over to Meta actually too, because it's another one that's at its all-time highs. So just watching this one, we do see obviously we are extended kind of on a Fibonacci basis. Meta's at all-time highs. Great job if you kind of caught the Meta trade earlier, a couple years ago. Just moving on here though, we'll flip down to our dollar stores. So we talked about our dollar stores doing well in times of hardship. We do see kind of that higher macro low than this one here, but it did lose kind of the low time frame low, but bouncing here. So we'll see if it can take out all the resistance here. Then I do think the Dollar General could actually kind of start to form a bit of an uptrend. Obviously, Dollarama doing well as well. So that big wick down kind of to support, got just a little bit below it, and a nice recovery there. PayPal down 12%. So interesting. Palantir is pumping on their earnings beat, and PayPal is dumping on their earnings beat. So PayPal actually beat their earnings, but dumping out quite heavily, coming back to this kind of level of support through here. But then if we look, it probably will coincide with a Fibonacci retracement. So if we take our fib from here to our swing high, we're looking at that, about that 786, a little bit higher. So a little bit low below that 786. Again, we're risking kind of that structure. So yeah, it's just interesting. I'm not really too interested in taking a position in PayPal right now. Just kind of, look at that huge sell here. So obviously someone did not like earnings there. We see Dell, we talked about Dell the other day, so managing to get a bit of relief here at that 786. Again, we're going to look for that higher low and kind of reversal of trend. AMD, I talked about AMD as well, getting a little bit of relief off that support zone. So just following that as well. Again, we would like to break out of this kind of trend line here, back test the higher low support, and keep continuing up from there. But looking pretty good for AMD. Hopefully we can see some strength. Maybe with their earnings, we'll hopefully get a bit of a pop. Maybe they'll surprise. No one really knows. We'll see. I think they report later today after close. So following that as well. Flipping over to our Bitcoin miners here. Obviously, we see that Mara down 2%. So we're looking right there at our 786 level. So not a bad DCA opportunity for Mara right there. Riot sitting above our zone here. It did come back down. Riot's a very interesting one because they've just announced that they're going to explore diverting 600 megawatts of energy to HPC and AI infrastructure. And if they announce a deal, so they've already got the facility basically built and almost ready. Now they just need to tailor it to HPC and AI. So we'll see if they get a deal from a hyperscaler. Riot's really going to pop. They've been lagging kind of this whole cycle. They offer a lot of value in terms of assets to their market cap. That being said, I'm not the biggest fan of Riot's management. They've missed their growth targets repeatedly. They overcompensate their management, and they messed around with Bitfarms in a way that wasn't really beneficial to any of the shareholders involved. So I do want to see management just being a little bit smarter, a little bit more conservative, and not compensating themselves so much while underperforming from a relative perspective. That being said, they are one of the bigger miners. They do have almost 20,000 Bitcoin on their balance sheet. They have a large cash position, and now they have that potential 600 megawatts to be diverted to AI HPC. We obviously saw Cypher jumping like 40% on the announcement of a $50 million AI investment. We've seen Core Scientific, we've seen TeraWolf all running like crazy on their AI deals. So if Riot announces something like that, all bets are off, and Riot's probably going to take off and really kind of outperform on that news. Again, that's all speculative news. We can't invest based on speculations. There is the fundamental value there, in my opinion, to warrant kind of a position in Riot. That being said, just due to the concerns that I mentioned, I just prefer to put my capital elsewhere. So moving down to CleanSpark. Look at that, bouncing from our support zone, looking a little bit of our resistance right through here. We want to break this. But again, CleanSpark, another not a bad DCA opportunity if you don't have a position in CleanSpark, or you just want to add to your position in CleanSpark, but ultimately recognizing some of these lower levels. Also, just so you are aware, I do have all these levels posted in my Bitcoin miner comparison and tracker document, so you can reference that for all my levels of interest. Cypher, we're looking more at an entry kind of, below $5 down to $4.50 for Cypher. Bitfarms up 4% today. So again, getting a little bounce here, a little bit of relief. I'm not personally interested in Bitfarms. We have this resistance all through here, and ultimately I don't know what happens with them going forward. Hive, again, back into this level of interest here. So again, not a bad DCA opportunity for Hive. Again, recognize the overall market risk and going forward what could happen. Looking at Hut's here, kind of just sitting just above the support here, kind of wedge. So not really actionable in my opinion right now. Iris Energy into resistance. Looks like it's rejected. So wait for that higher low and look for a potential additional entry on Iris Energy. Closer to under 950 is what I'm thinking. Flipping over to TeraWolf here. Obviously, again, just into resistance. So watch for that higher low. That's what we want to see. Core Scientific, another one into resistance. So that's what I talk about, guys. When we break down below these key levels of support, they often flip to resistance and will get rejected. And we need to now build more support down here before we're able to go out and then capture these areas and reclaim them as support. Obviously, Core Scientific, we are interested in it kind of down. I would even be interested down here at, these lows here. Let's take a Fibonacci and kind of see what lines up. So we take our fib from this swing low. So this swing low here to this swing high here. Then we see obviously, yeah. So $11 up to $11.50 is what I might be interested in. Kind of a short-term, higher risk position in Core Scientific. I do think there's a lot of value in cores. They have all their AI deals already signed, and CoreWeave is funding the transition of these deals. And so they've basically exercised 270 of the 500 megawatts available to them. So expect CoreWeave to exercise the full amount of the contract in 2025-26, and then adding that additional revenue going forward. So really good value in Core Scientific at the right valuations because of the deals they have signed. So yeah, we're looking for another entry down there. Flipping over to Bit Digital. Kind of came down here, bounced right around our upsloping trend line again, though. Let's just wait for that higher low and additional entry. Moving over to Coinbase. Coinbase again. So yeah, everything is just getting stuck under resistance here, guys. So, we're not going crazy. We're letting the market show us its hand before we really start to kind of get aggressive here. We don't want to get caught on the wrong side of the move. MicroStrategy bumping up a little bit here. So I am in a swing position of MicroStrategy. Entered on this breakout back test of the 618. I've got a stop loss below this low over here. So my stop loss currently is 275, and then I'm just holding this and see what happens from there. But that's pretty much it for today. I don't want to go too far into things. There is some buying opportunities. Maybe we'll take a look at the altcoins real quick here. Obviously, we see Bitcoin dominance. Again, it's holding this support here. Let's take a look at the hourly. Yeah, so holding this bull flag support, that's not what we want to see from dominance if we want to see our altcoins perform. We have seen Ethereum, Bitcoin here with a little bit of relief. So on the low time frame, we're actually trying to reverse that price trend or that price structure. So technically, we are in a bit of a technical uptrend on the low time frame. Assuming we can just keep continuing that higher low structure, it should look good. This is only the 1 hour though. So again, when we flip to the high time frame, that's where we want to see confirmation. So eventually though, by watching the low time frame, that price action is going to eventually translate onto the high time frame. But we don't assume high time frame confirmation until we actually see it on this chart here. So until we see something like this, where we on the daily chart, we really can't assume that we are going to reverse trend. Low time frame support is weaker than high time frame support, so keep that in mind. Others dominance. This is one we've talked about in past videos, so we've kind of been avoiding alts, and for the obvious reason that this is what we talked about, breaking down from here, back testing, getting rejected, and then yeah, we're just down here building out a base. So again, I don't think you want to get too crazy in alts. There is potentially some opportunities out there, but that being said, others dominance, Ethereum, Bitcoin, and Bitcoin dominance Bitcoin dominance is looking strong, and others dominance is looking weak. So Bitcoin should outperform most alts. And obviously, yeah, you can see pretty dumpy across the board for altcoins. Yeah, it's been a bit of a rough couple weeks for Bitcoin and crypto. Obviously, the markets kind of shook off the whole AI thing relatively quickly, and they didn't even really kind of experience the effect that the tariff escalations did on crypto. Obviously, because crypto was open on the weekend, and by the time that the market opened, there was already news that Canada and the US and Mexico were going to engage in negotiations or discussions. So yeah, obviously crypto, Bitcoin taking the brunt of that negative news event there, but that's all good. The market structure looks fine. Bitcoin looks fine from a cycle perspective, but altcoins, they're going to have to do a bit of work to start showing some strength. And then we'll see kind of going forward again. We're just going to let the charts tell us what the next move is. And until then, we wait patiently and we execute our strategy. Thank you so much for watching, guys. If you like the content, if you learned something new, please like, share, and subscribe. It all means the world to me. And I'll see you guys in the next one. All right, bye.